Let's start on that with my first guest of this new trading week, Peter Maguire, Trading.com CEO, joins me now. Peter, good morning to you. Look, pretty quiet out there in Sydney this morning, rightfully so with the public holiday. Thank you for joining us again. I'd like to get your thoughts first on that OPEC Plus story.
Well, good morning, Nadine. Happy Monday. I'll tell you what, it was, well, if I look at, first off, I'll look at price. We've had a little bit of a boost. We had an 8% washout last week as far as crude prices going into the meeting, and they've bounced a little bit this morning in Asian trade. Now, 137,000 was the handle. We all understand that the Saudis are after far greater market share, and that seems to be the storyline, and I'm looking forward to seeing how the next few meetings are interpreted by not only the market, but what happens as far as President Trump and increasing production in the US. So everyone's saying you're in a glut Q4, and I think that's really going to materialise over the next couple of weeks and leading into November and December and then the first quarter of 26. So I think cheaper prices, good for the consumer and certainly great for inflation. And maybe, I'm not going to call it, but maybe we're going to see a 40 handle for WTI over the next 4 to 6 months.
40 handle. Wow. That's like, when does it become then non-economical to bring on further production in the case of US shale, for example?
Well, in the 40s, I mean, that could be $49.99 or it could be $40.01 or zero. But, it does get to a point of that. We all understand what the headline numbers as far as production and what those large producers want, the $70, $80, $90 to break even and so on. But there seems to be very much a race to the bottom at the moment as far as increasing market share. And we all understand the relationship between MBS and President Trump. And that seems to be the story that everyone's, the whisper's no longer whispering. It's certainly very loud. And that's been demonstrated in the meeting. So I feel as though there could be some cost pressures there. But that's, that's their production and that's what they've got to live with as far as dollars and cents.
All right, Peter, just staying in commodities, gold. What happened with gold over the weekend and how are we set up for this week of trade here in Asia?
39.20, absolutely on fire, huge run up, highest ever. And it was just awesome, over the last probably 5 or 6 trading sessions. So it's one-way traffic. It's taking up little brother, which is silver. It's broken $48 an ounce. And platinum's had an incredible run as well. So silver's been the standout, up about 65, 66% in the last 6 months since the 4th of April, that low of 29 odd dollars. So you'd nearly put on $20 on 29, which is just, incredible. And then as far as gold's concerned, I think the new story's got to be maybe Goldman's are right, tipping that 5,000. So let's just see where it rolls to Christmas. But I think 4,000 is going to, the way it's moving, Nadine, you could be there within the end of the week or certainly by end of next week. So it's just incredible momentum and I don't think that's going to go away anytime soon.
Wow. Yeah, it's pretty incredible. It's been one to watch all this year. Now, we did not get the non-farm payroll report on Friday because of this U.S. government shutdown. What sort of indications do we have on the jobs market? Because we did last week get that private sector read on jobs, the ADP.
Yeah, exactly. If let's just think that, and we work through, if the Republicans and the Democrats do come to some sort of piecemeal bipartisan deal over the next couple of days, then I think that you'll get a non-farm payroll Friday week. And so there's the first part. Now, September's job report we published, and that could be we're looking at that forecast point to around about 50,000 jobs. Now, there's certainly considerable uncertainty about the release schedule. ADP reported payrolls at US companies dropped 32,000 in September after a revised decline a month earlier. And then you've got Homebase, which provides workforce management software to smaller businesses. They suggest a decent gain of around 150,000 in September for payrolls, according to Bloomberg Economics. So, look, if we can get to 50 to 70,000 as far as non-farm payrolls, that'd be a good number. But we all understand they've trimmed out a lot of those revisions over the last 6 or 8 months, Nadine, which have been massive numbers, and we're talking in the millions. So it's let's see where it all rolls and what the Fed's appetite's going to be as far as rate cuts.
Well, we do get Fed minutes, correct me if I'm wrong, this week. So what will we
Yeah.
be looking for in there, considering, where the market is really gaining a lot of its risk appetite from, which is the prospect of further interest rate cuts?
Exactly, so you've got that as far as data releases this week. I think everyone's sitting on the edge of their seats because you haven't got a non-farm payroll. So let's see, as far as minutes, what the story is as far as thoughts and processes moving forward for Fed Chair Powell, and whether we're going to see those other 50 basis points of cuts coming in by end of year, or really you've only got November, I think, and we've got to see some dramatic movement by then. So naturally he's looking at inflation and certainly job numbers, and that will give them I suppose, the decision time to say, yes, we're going to see something happen before Christmas, or are they going to be pushed back into 26?
Oh, there's a lot happening out there. Not a lot, though, on the economic data front here locally this week. We do get the monthly consumer confidence read from Westpac. One thing that even my husband was talking to me about this morning was crypto. I mean, Bitcoin continues to power along. Any chink in that armor you can see or not?
Oh, he's a wise young man. 124,000. I mean, the way it's going at the moment, you'll be probably... Seems to have a lot of momentum. It's had a really strong rally in the last week. XRP still, languishing at a bit of those early $3 US, but Bitcoin's, tested new highs. It's come back a little bit this morning, but it seems to be on a one-way trip, and that seems to be, very much bullish. So again, I'm curious to see where they run over the next week or two, and gold and silver. So that seems to be the appetite for many traders. A raging bull market as far as US equities and Asian equities for a lot of them. So it's a time to be very much in the market, not out of the market.
Got it. And so as you look as a trader to the week ahead, Peter, we talked about gold, talked about oil, obviously, but are you feeling like things are running a little too hot? Things are getting a bit stretched out there in terms of valuations? I mean, you just look at Nvidia, for example.
Yeah, I mean, absolutely. There will be an inflection point, Nadine, and you will see, a certain amount being washed out. That's just a normal economic cycle. I don't know when that is. It'll happen. There's no doubting that. And the more frothy it becomes, the bigger the chance of it happening and the sooner. But, at the moment, everyone's very bullish. We understand, Nvidia and the Mag 7 and all of the numbers. But when you're looking at the NASDAQ, I mean, here we are. Futures are up 0.28% now. So, everything's about, I think, bullish leading into certainly the first half of October. And, we can look back in history and say October a pretty violent month. So let's just, hold on to our hats because anything's possible.